TV, and also welcome back to Jam Crypto, whichever platform you're watching on. Welcome, and I hope you guys are having a fantastic day wherever you are. Wherever you are. So, as for Bitcoin, it's kind of like consolidating sideways, and we have talked about the price action basically since 126k. We dropped to 102k if you check it on Binance, and because we bounced back just like 2 days ago to 114, people were saying, okay, Bitcoin is so back, but now we're kind of like unsure where Bitcoin is going. Have we seen the cycle top already? So as I keep talking about this for days on live stream at Roxham TV, is that, well, wake me up when this downtrend has actually been broken out and Bitcoin is actually trading above this downtrend that we have been building since 126k. Other than that, I'm just like chilling, waiting for Bitcoin to actually do something. If we are still trading inside this momentum, inside this triangle that we have been building, I will say most of that is just noise. Like, I'm not turning bullish anytime soon. Like, of course, for today's agenda, we're going to look at TA. We're going to start with the shorter time frame. So we're going to start with the hourly candles, slowly move on to the daily, and also on the weekly candles of Bitcoin. We're also going to look at S&P 500 because S&P 500, we dropped a little bit yesterday because Donald Trump said some crazy stuff again. So he is no longer meeting Putin. The two of them, of course, like having another argument, just like a usual Wednesday for the global market. So we're gonna take a look at that because Bitcoin is becoming a macro asset. So it makes sense to really look at the traditional market, look at geopolitics, look at the macro economy, what they've built, what they've been doing for all these times. So we're going to dive into the charts. We're also going to look at the on-chain analysis to really build up the case where Bitcoin is going, to basically see if there's any trading decisions we should make right now, right at this instance. So anyways, we're going to start with the chart, and then we're going to slowly move on to what Donald Trump has been doing and all this news analysis. So let's hop onto my laptop right now, starting with the hourly chart of BTC. So right now we're trading at 109k. And as I keep talking about this downtrend, we weren't bearish when we had this like massive crash back in 10th of October. We were bearish when we were forming this downtrend for basically ever since we reached the new all-time high. So market has not recovered ever since this massive crash, since the Donald Trump tariff news gonna charge China for 100% on those tariff rates. So ever since, we haven't really recovered that. But like general, this downtrend, like people were so happy basically 2 days ago when we had 114k. I was on Twitter and people were like, hey, all the short positions got squeezed, got liquidated, so we're back on. But I was like, no, just look at the downtrend. Like, okay, we kind of touched this downtrend, but we didn't really manage to stay above that. Like, there isn't a hourly candle actually stay above that. So that's why I was like, no, it's just news. Basically wake me up when Bitcoin actually broken out of this general downtrend. We need a break up. And we need to stay above the 113k, 114k as well. I do see a huge resistance around this level. So here we touch, of course, the general downtrend, and then we got rejected. So like we need to actually close above this to basically have a confirmation that we are heading for a leg up. Otherwise, it looks like this chart is showing weakness on the shorter time frame. And let's also go ahead and pull out the RSI. So one thing I noticed from the RSI is that, okay, there is some bullish sign. So it's not like all doom and gloom. Like we are seeing this rising, taking up our side. So what I want to see is we manage to stay above this like uptrend. And if you actually zoom closer, we are having this uptrend as well on the hourly price action. So let's see if we manage to stay above this hour size. So that's one good thing I like about the shorter time frame. However, as I mentioned, like as long as we still stay below, or maybe we could go up and then we get rejected again. Like if we keep getting rejected, that's like weakness for the hourly trend, right? So very much 101k is still on the table. Like we are looking at the Coinbase chart. So if you hop onto Binance, you'll see 101k. But 101k, why I keep talking about this critical level is because it's actually aligned with the weekly chart. So with the 50-week moving average. Of course, we're gonna take a look at that in just a bit, but right now let's hop onto the daily chart. So daily candles of the Bitcoin price action. So perhaps we could shed more light where Bitcoin is going. Again, on the daily candles, this general downtrend is still forming. So I would like to see Bitcoin actually close above, and if it like keeps going down, then 101k is again very much on the table. But it looks like we are just like chopping sideways. The sideways consolidation is very possible. Of course, we're still waiting for more inflation data and also rate cuts. So my speculation is that, okay, we have inflation data coming on 24th of October, which means tomorrow. But at the same time, we are experiencing a government shutdown. So perhaps the data, we kind of need to adjust how reliable the data is. So that's one macro, and the macro is actually not that bad if you think about it. Like we had this market crash, it was only because of the tariff news. So Donald Trump tweeting out 100% tariff rates on China, and if that's the only reason that we experiencing a prolonged bear market, then I got nothing to say. Maybe we could throw out all the analysis, throw out all the data out of the window, but like I don't think we have entered a prolonged bear market from a shorter time frame and from a daily time frame. Looks like we are just like chopping sideways within below this like downtrend. I do see there's support. So from the daily, let's pull out the VLVP. Let's look at the volume here. So one thing I noticed is that, right now we are trading at, oh, why it's not working properly. So right now we are trading at 109K, but if you actually zoom out, there's a lot of like price action around 101K. So if we lose this trend line, if we get rejected again, so 101K is very much on the table. But one thing kind of worries me is that, if we lose 101K, around right here, 102 to 101, then if we bring out the VLVP, the volume here, basically is a free fall. In other words, if we lose 101 to 102, then it is almost a free fall down to 94K. That's one thing I noticed from the daily chart. Again, since we haven't broken out of the general downtrend, like this is very much on the table. It's just more like the bearish scenario that I'm seeing. But using the macro analysis, like there isn't much reason for me to be that bearish. Although this is quite concerning when it comes to the volume, because there is no volume around this region. So from a TA perspective, if we lose 101 or 102, we're gonna fall down to 94K. So that's one thing I noticed. So Bitcoin really need to need to maybe consolidate and build some momentum here before we have confirmation whether it's a leg up or a leg down. So anyways, this is for the daily. As for the SPX, so S&P 500, we're talking about that a little bit in the beginning of the show. So of course, yesterday there's like more FUD from Donald Trump. So before that, he promised he's gonna have a like face-to-face meeting with Putin, but yesterday he broke the news that it's a waste of time of meeting Putin, and he's quite angry. There's more sanctions on Russia when it comes to the Russian oil and natural gas, yada yada yada. So that's why we have this like market crash for the TradFi well, so S&P 500. And as we know, Bitcoin is becoming so big right now. It's becoming a macro asset. So when we do analysis, it makes sense to tie Bitcoin with the TradFi well right now because Bitcoin is so big already. So when S&P having a little crash yesterday, having a little dip, it makes sense that Bitcoin experienced a little tiny correction as well. So that's one thing I noticed, like Bitcoin was following the price action. Let's also hop onto the weekly, like we're slowly building up the time frame here. So weekly, again, like let me close the drawings and let me close the VLVP so it's not as messy. So one thing we're trying to figure out on the weekly is whether this is a local top. So there are like different local tops here, local tops. Is this a local top or a cycle top? That's one thing we're trying to figure out here. So that's on the weekly thing. But like as I keep talking about the 50-week moving average, so 50-week right now is sitting at, rose a little bit, so 102K. I thought it was just sitting at 101K. So anyways, 102K is the new 50-week moving average. So the reason why we need to pay close attention to this indicator is that this has never failed us. Like if we go back in time, and if we have a weekly candle actually close below the 50-week moving average, then that means Bitcoin has entered yet again the prolonged bear market, a 365 days of correction, of going down. So that is like a pain in the ass for sure. So at least from a higher time frame on the weekly chart, I'm not seeing that. So there is not much reason to be that bearish. Like, okay, we're kind of taking things one at a time. So if we have, last week, we didn't close very strong because like between the 13th of October till Monday, so 3 days ago. So basically what I'm saying is this weekly candle, it didn't show much strength. But until we have confirmation that we're actually dropping below the 50-week and actually close below the 50-week, I still think this is more like a correction instead of a prolonged bear market, because like if I'm using my analysis and using my brain to try to see where the market is going, it's just like it doesn't make sense for me to call this a cycle top. I know there's like a 4-year cycle thing. I'm very much a strong believer, but when it comes to the 4-year cycle, there are different calculations as well. So if you're using the cycle bottom to the cycle top, that will take us around 1,064 days, and that's how we get the cycle top on the 6th of October. Actually, a lot of my friends were selling a lot of their digital assets on 5th of October, or some of my friends sold even earlier than that. So they are enjoying right now. They are making fun of me because they sold right at the top 126K. But we only know this in hindsight. Right now, we're waiting for the confirmation. If we close below the 50-week, then I'm out of here. Like I'm not holding my bags for at least a 365 days that is extremely painful. I'm just like taking my profit and I'm gonna leave. So at least that's my strategy. And macro wise, it's really not looking that bad. We know we're going to have more rate cuts, and it's not just rate cuts from the US, it's rate cuts around the whole world. We know that Europe is following through. We know UK is following through as well. China, many parts of Asia, they're cutting rates, so global liquidity is really unlocking. And then we have a leverage reset from what happened on 10th of October. So that's actually another bullish catalyst. We know 401k is unlocking. So QT has, Jerome Powell has confirmation that QT is going to come to an end in future months to come. So there are so much bullishness in terms of macro economy, and I really cannot ignore. Like if Bitcoin just trying to follow exactly the 4-year cycle, then yeah, it's just like it's not making sense to me because all the institutions are here. But again, Q4, I would say we are definitely not at the cheap region if you're just starting out in the Bitcoin market, but we're definitely at the later stage of the bull run. So we do need to take things one at a time. That's why we're doing live stream every single day. I do have a crazy thesis because since we are, I like to call this a correction instead of a entering a bear market. So my thesis, okay, I'm just having a wild guess here, okay? My thesis is that we know that there's going to be a rate cut on 29th of October. That's the FOMC meeting. So if we end up getting a 25 basis point, what if in the coming days that if Bitcoin dropped below the 50-week and basically kissed 50-week and then we bounce back up because the macro is getting better. So that's the crazy thesis that I have. Like if that's really the case, then the 50-week moving average becomes a really good buying opportunity. But again, it's not financial advice. And perhaps we're gonna get like the last week of October, we're gonna get a tiny rally all the way to November. Someone likes to call it like November. So all right, so that's for the TA. Let's also hop onto some on-chain analysis to shed some more light and build up the comprehensive case we have here. So the first indicator that I want to look at is the short-term holder cost basis change. Of course, we covered that a few times on this channel, on Roxham TV. So this is the average buy price of Bitcoin for short-term investors, people who bought within the last 155 days. This 155-day mark separates short-term holders from long-term holders. It's an important level because it often acts like a momentum line in the market. In bull market, Bitcoin usually stay above this line. So this pink line here, that's the STHCB, so short-term holder cost basis change. So if we stay above this line, that means buyers are very confident. The confidence is really high. Vice versa in bear market, it usually below that, and we are below that. Meaning people are really scared. They are selling. So when the price is near this line, it tells us that about like the short-term market sentiment, whether traders are feeling brave or they're feeling fearful. Yesterday, what's happening right now, okay? So yesterday, Bitcoin tried to climb above this line, this pink line we're seeing here, but we got rejected. So even though the price looked strong during the day, it couldn't stay above that level by the close, which is a sign that short-term traders are still very nervous. So here's the psychology. When the price reaches the average buy price, many short-term holders sell because they are scared of losing again. They just want to break even and get out. That's why this level often creates selling pressure. Right now, this level is 113K. Again, is aligned with the TA that we were showing just minutes ago. If Bitcoin can rise above it and stay there for a few days, it will show that the bulls are back in control. But if the price keeps getting rejected, it means fear is still very strong and short-term traders aren't ready to buy confidently yet. So this is one on-chain indicator. The second was the very famous, the Maya multiplier. So what the hell is this? So it shows how far Bitcoin's price have moved compared to its long-term trend. So the trend is here, 200-day moving. So basically the average price of Bitcoin over the last 200 days. This metric helps us to see if Bitcoin is overbought or undervalued. If the Maya multiplier is above 2.4, so you're seeing this like pink line here, like if we above this level, that means Bitcoin is at an overheated zone. That's often near the top of a bull cycle. When it's around or below 1, so below 1, it usually means Bitcoin is cheap and we are in a strong buying zone. So it's a simple way to tell if the market is too hot, too cold, or just about right. So from this chart, what we can see that the Maya multiplier is sitting near the lower end of its range, close to the 200-week moving average. So tells that Bitcoin isn't overheated. In fact, it might be going through a healthy reset. During this bull market, Bitcoin has been bouncing between its 200-week moving average, so the blue line here, and also its mid-level, which is the orange line, so orange line here. Even though the price is still above 100K, the Maya multiplier shows that the market is not in a crazy top zone like we have seen in the past cycles. So what does this mean? There are two ways to read this. Like this could be a bullish reset, like a cool down before another move higher, or it could be an early sign of weakness if the market fails to bounce. But based on other on-chain data, it looks more like a reset before another leg up, not the start of a bear market. All right, let's also hop onto the 4-year cycle. So Bitcoin index performance since cycle low. As I cover the 4-year cycle extensively, here another clear chart just to show you where the market is at right now. So in this chart, of course, we have the orange line, which is the Genesis cycle when Bitcoin just got started, basically. And then we have the red line between 2011 to 2015, and then green line 2015 to 2018, blue line 2018 to 2022. And right now we are at the white line at the bottom, so 2022 and onwards, which is right now. So when we line up all these cycles with the others, we are roughly at the same point where Bitcoin peaked in 2017. This doesn't automatically mean the top is in, but it suggests we are in the late stage of the bull market. At this point in the past cycles, the market usually become very emotional, so full of excitement and greed, and things move very fast, both up and down. So the message here isn't to panic or to call the top, is to basically stay aware. That's why I keep mentioning we need to take things one at a time. So history doesn't repeat exactly, but it often rhymes. And we are now in the part of the song where volatility kicks in. So I would say the key takeaway here is, okay, Bitcoin showed a small bounce yesterday and then it got rejected again at the short-term holder cost basis, meaning short-term traders are still very nervous. Cycle timing suggests we are near the end phase of the bull run if history rhymes. It's not do or die, but bears control the short term. Still, many on-chain metrics are showing lower range signals, meaning Bitcoin might be setting up for a rebound. bulls will be watching closely for a strong bounce and a move toward new all-time highs in the coming weeks. Again, that's aligned with the whole macro analysis and the whole TA analysis. So anyways, so that's for all the data that I want to share. All the numbers are out of the way. Next part of the show, we're gonna move on to some news analysis. But before we do, let's take a little break, and I'll see you guys in 3 minutes after the ad.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
And welcome back to the show. As I promised before the ad, after the data analysis, we're going to show you the news analysis and what Donald Trump said yesterday and create so much panic in the market yet again. So here's the news. Here's what happened. Donald Trump has announced his first big sanctions on a second term, this time against Russia's oil industry. So the U.S. Treasury said basically half a day ago that it's putting new restrictions on Rosneft, so Rosneft and also Luke Oil. These are two of Russia's largest oil companies. So Donald Trump said the goal is to cut off Putin's war money in Ukraine after peace talks failed. This also came after Donald Trump canceled a meeting with Putin in Budapest, calling it a waste of time since Putin refused a ceasefire anyway, so might as well just cancel it. Even though the US has not bought Russian oil since 2022, these sanctions still affect global markets since some refined products made from Russian crude are still finding their way into US market through other countries, especially India and China, who buys a lot of Russian oil. So oil price, of course, it went up a little bit. So here's on the Brent crude oil. So the past 5 days, it went up almost 4%. US stocks, of course, it dropped yesterday, according to the news, and Bitcoin also reacted with big swings as investors try to figure out what this all means. So when it comes to the details of the sanctions, the US is now freezing any US assets belonging to these two companies. So these two oil companies, so Rosneft and Luke Oil. American companies can't do business with them anymore, and the sanctions also hitting shipping networks and banks that help move Russian oil around the world. There's also a warning for anyone helping Russia avoid these bans, they could face secondary sanctions too. So if things don't improve by 1st of November, the US might go even further, possibly targeting a Gazprom and even cutting Russia off from the SWIFT system, because right now only several Russian banks have been disconnected from the system actually. So if the US extends the sanctions, it could make international transactions for those banks even more difficult and even more costly. So, in terms of the global reaction, like the EU, literally 1 hour ago, before we hop on this live stream, the EU approved sweeping sanctions targeting Russian gas and crypto, closing one of Russia's largest, like one of the Russia's last big energy loopholes. And India is already reviewing contracts with Rosneft and might cut imports by 500,000 barrels per day, whereas China hasn't reacted much. But US officials are watching as ghost fleet tankers that secretly move Russian oil. Meanwhile, Russia responded by holding a new nuclear drills and warning it may send weapons to US enemies. All right, so we know that there's a failure between the Trump and Putin talk. So they were supposed to meet in Budapest later this month, hosted by the Hungary's the Hungary. So, but after new missile attacks in Ukraine, basically on 21st of October, Donald Trump called off that meeting, saying Putin wasn't serious about peace. It's just a complete waste of time. Putin was like, "Oh, it was expected to have this cancellation of the meeting." As of now, there's no new date for the summit, but on Polymarket, because Polymarket is the prediction market, people are betting whether Trump will meet Putin again by, I don't know, like the end of October, so less than 1%, this would happen. This is what people are betting on. And then 18% bet that they will meet by 30th of November. And then another 30% say, okay, maybe by year end. So as for crypto, like the biggest story is Russia's crypto pivot. Because we know Russia now trying to legalize Bitcoin for foreign trade and plans to use USDT and other crypto tools to bypass sanctions. That means Russia could start using crypto to sell oil, which could increase on-chain activity, but of course raise global tension. At the same time, Donald Trump is pro-crypto, and his team is reportedly studying models for US Bitcoin ETFs that might hold sanctioned assets in the future. So Bitcoin, in other words, is once again caught between politics and policy, both as a hedge and also as a tool for evasion. So what to watch next is like if Russia does retaliate, do you expect more market drops and possibly new US sanctions? Oil may stay very volatile for now, maybe for weeks, meaning higher gas prices and more inflation pressure. As for Bitcoin, again, 113K, that's the critical level we watch. So if we break out and manage to stay above that, that's a bullish breakout. If not, 107K looks like a short-term support to me as of now. Okay, let's also move on to the macro, what the US government has been doing. So, of course, US is at a shutdown right now, and the shut has lasted from basically the 1st of October till today, so 23rd of October, so 23 days. And it's causing big problems for the Fed because many government offices are closed, and those key economic data is not being collected or updated. This includes data from the BLS and Census Bureau, the same agency that gives us reports on jobs, on inflation, and on retail sales. So without those numbers, the Fed is basically flying blind when trying to decide if it should cut more rates or hold interest rates. Right now, we are in a so-called data blackout. the economy is still moving, but the Fed doesn't have a clear vision. So of course, like if you guys missed out on this, it's very difficult to miss out. But like how this shutdown got started, right? So it began because Congress couldn't agree on a funding bill. So Republicans demand a $2 trillion in spending cuts, less money for Ukraine, and lower health subsidies, while the Democrats wanted normal funding plus disaster aid. So Donald Trump sided with the conservatives, of course, and vetoed a compromise, calling it pork-filled. Now, around 800,000 federal workers are not being paid, like national parks are closed, and key agencies like BLS and Census are shut down. So economists say that it would lose around $15 billion in GDP per week in a shutdown. So talks are happening, but chances of a deal soon looks really, really low. Let's hop onto Poly Market and see what people are betting. So when will the government shutdown end? So you can see how bearish people are. Only 4% think that we're going to end this between 23rd to 26th. And then another 10% think that we'll end this between 27th to 30th of October. So yeah, things are not looking good. And other 41% think that it's going to be November onwards, so mid-November. So that's what people are siding on Poly Market. But how this hurts the Fed, right? Because the Fed doesn't collect data itself. It depends on these government agencies to do the work for them. With BLS and Census mostly shut, the Fed's usual information stream has stopped. So the Fed, of course, still working because they are self-funded, right? But that team now use private estimates and AI-based proxies like Google Trends, which are far less reliable, of course. So right now, Jerome Powell and the Fed are working with old data and partial forecast, similar to what happened in 2013 when a past shutdown caused a 1.1 error when it comes to the GDP estimates. So even with the shutdown, some data from September and earlier is still available. For example, we have the CPI, and as for the year over year, we have an increase of 3.1%, no change from July. Well, this is a little bit higher than what the economists want. They want to control that to 2%. But so think of CPI like a grocery receipt for the economy. It tracks price changes in a big basket of items, so rent, gas, food, services. But we do care more about the core CPI because it removes food and energy, since those prices move too much, is too volatile, and it moves like month to month. So the core CPI is the sticky part of inflation, things like rent and healthcare that don't change as fast. Right now, since the core CPI is at 3.1%, that means inflation is still high. So if rents start falling, the core CPI will likely drop too. That's how you read it. So can you trust this data now that the government is on a shutdown? Mostly yes. The data we already have in like August and September are mostly fine, but new numbers like October onward are incomplete and delayed. The BLS can't collect full samples right now, meaning some areas might be undercounted. Private groups like ISM, which does the PMI report, are still running, so that data is reliable for now. Markets know this, and that's why the volatility is so high. If the shutdown ends by, I don't know, month in October, which the people are betting against, especially on Polymark, data agencies can really catch up in a few weeks. That means the Fed November meeting might still have enough info to decide on a small 0.25% rate cut if inflation shows cooling. If this continues, the Fed will have to make policy without fresh data, which is a little bit risky. So a shutdown, think of it like fork. The car is still moving, but the visibility is bad. It's very low. So again, the message here is just like how we said in TA, stay cautious. We kind of need to take it one at a time, and then we're going to watch out the 50-week moving average for Bitcoins. All right, so that's for the government shutdown. Let's also move on to the market crash, because we know why we are basically why we're talking about the TA or Bitcoin's price action so much is because we have a Black Friday, so crypto Black Friday. Bitcoin crashed from 123K, so we were doing a little bit of TA just in the beginning of the show. So it crashed from 123K, that is the big red candle here, to 106K. So it depends on which exchange you watch, of course, in just a matter of few hours. And over $19 billion in leverage trades were wiped out. So that's only the official number. The actual number is definitely way more than 19 billion because a lot of centralized exchanges aren't really reporting the actual number. So the crash came right after Donald Trump suddenly announced 100% tariffs on Chinese goods. And it happened during a US weekend when liquidity was low. Markets panicked, exchanges froze, and users couldn't sell fast enough. And many people, many traders are putting the blame on Binance, actually. They're blaming Binance for this. What they're saying is that their accounts were frozen or lag, stop loss orders failed, and Binance and the market maker Wintermute, they kind of work together to trigger these big liquidations. And the result is that there are basically many people are boycotting Binance, and we have seen the boycott event on Twitter. So the accusation is that around 40% of users said their accounts got locked for roughly between 10 minutes to 30 minutes during the crash. They missed exits and losses grew by 10x. And there is also some FUD on Twitter as well. So this person is saying that there's data from Nansen showing that $700 million from Wintermute pulled a short positions right before the crash, and they made about $200 million in profit. And then it does have some dodgy part because if you guys are into Athena or DeFi, you know that there's a stable coin from Athena called USDE, and it was depegged on Binance. It went to like 65 cents, and it was a very exclusive event to Binance only. So other exchanges, especially DeFi, it was working fine. So even the co-founder of Athena was like, USDE did not depeg, but Binance did. So because of this, everything piled up and people are pointing finger at Binance. This hashtag like boycott Binance on Twitter, they're like trending a lot with over like 100,000 of posts. And even Wintermute CEO tweeted that Binance screw us. But later, of course, he deleted it. But it's just like so much fun for Binance. Everyone is pointing finger at Binance. And of course, the Binance CEO, Richard Tan, spoke about this issue. So he was saying there's no manipulation. He said the systems handle 10x than the normal traffic, and it still managed to stay 99.7% online. So any slowdowns, they were just like safety checks. As for the Wintermute rumors, he called them like baseless market smears. And they launched a crash review committee with Chainalysis to audit the event and begin hourly proof of reserves updates. Well, they are really, as for the recovery plan, they are really hard to win the retail, so win the customers back. Because after the crash, Binance launched out a million relief program to win users back. They are covering all the DPEG losses because, again, if the users are using USDE as collateral, if the collateral all of a sudden dropped to 65 cents and it dropped basically 35%, of course, it triggered the liquidation a lot sooner because the system was like, okay, the collateral lost so much value, might as well just liquidate. So that's what happened. And because of that, they have this like $400 million relief program, and hundreds of thousands of users get reimbursed. And they are pushing really hard when it comes to the BNB. Like we are seeing the BNB ecosystem and the BNB coin everywhere. So Polymarket added BNB deposits today, and even they have this like airdrop $45 million relief to meme traders. So Binance is really trying hard. And for the past few days, we are seeing BNB now available on Robinhood and also BNB available on Coinbase. So is the trust back for Binance? I would say only partially. Like the doubts still remain because traders will distrust Binance risk engine for sure. And both Wintermute and Binance, they have a reputation of manipulating the market for years. So I would say like these doubt piled in from all these years is not just one incident, one isolated incident, I would say. But anyways, like Binance is still sitting at number one in terms of like trading volume. So from the past 24 hours, there's like close to $24 billion when it comes to trading volume. So it's very much sitting at number one from all these like spot exchanges. Of course, the second one being Bybit. And I would say Bybit is coming in hot because, okay, for the past 24 hours, there's like $4.3 billion of trading volume. So the CEO of Bybit, so Ben, he calls Bybit the Switzerland of crypto, like very neutral, transparent, and friendly. Analysts say if Binance gets hit by more US lawsuit, then Bybit could really eat that market share away, like slowly from Binance. So that's what they're claiming. And we do have like lessons to learn from the past, right? Because like ask me in the next cycle, of course, like this ranking list, like the top cryptocurrency spot exchanges is not going to be the same. Like, is Binance going to remain number one? I don't know. Like, the competition is really keen. But what we have learned in the past is that, okay, this ranking list changes over time. Of course, like back in 2022, we have FTX, and the collapse actually happened in days, and Binance absorbed most of the trading volume and shot up like close to 60% of the market share. So as 2014, we have Mt. Gox, that's another really infamous one. So the pattern here is that, okay, big exchanges don't fade slowly. They either survive or they explode. So I would say Binance right now looks stable. If lawsuits quiet down and volume stay above $23 billion, $20 billion a day, Binance keeps the crown. If the US investigations like flash crashes hit, Bybit, maybe because they're coming at the second one, right? Maybe gonna eat some of Binance lunch. So for retail investors, I would say like access to BNB on new forms is a big milestone. So they're really trying hard. It's on Coinbase, on Robinhood, it's on everywhere. But of course, always diversify your assets. And even not just like digital assets, but even when it comes to the exchanges that you use, don't just use one exchange, and definitely don't only use centralized exchange. Like centralized exchange, there's a beauty of being so convenient, but again, always like hold your own key, because not your key, not your crypto. All right, so let's move on to the final part of the segment, of the news segment. So Amazon unveiled their own smart glasses that are being tested by their own delivery drivers. Here's the video if you guys. As you know, I'm always a big fan of like this tech gadget or AI stuff, and this is the, of course, frames. They are audio fast smart glasses. There's no screens, no cameras. They only focus on Alexa voice control, and notifications. They're very light, though. Here's the picture of what it looks like. It's actually been out for months, but I'm seeing a uptake when it comes to smart glasses. A lot more people are very, very interested. As we know, we have the Matter one coming along. So if you this to Matter, like I was saying, they're very different. So the Echo frames win on comfort, on price, on privacy, while Matters there's more like an AR stuff. So the smart glasses market is really growing fast. And when it comes to smart glasses, there are actually a lot of those in Shenzhen, and they have the translation. So even if you, I don't know, if you don't speak Chinese, and if you wear those glasses, you're gonna hear the English translation as well. So what the Apple frame does, like what they are, so they have no screens, no cameras. They are audio smart glasses with Alexa. The use case is mainly like hands-free voice control. You can ask them to play music, podcast, or call someone. The battery is about 6 hours, and why people like them, because it's like simple. It's like no camera. Great if you already use Alexa at home. So yeah, I mean, if you guys are into gadgets like this, of course there's limitation because there's no AI screen, no camera. Some people might prefer the Matter glasses, but again, they have really different use cases. The actual frames is lighter, no camera. Matter look great, but like heavier, and the camera can feel awkward in public, if you know what I mean. And then the actual frames they use Alexa. The Alexa one is mainly like cameras for photos, for videos, for live streaming, and AI that can see and translate. Because what Meta is doing, I would say, is very much Black Mirror stuff. They both have the audio sound, the sound and battery, of course. So yeah, the Meta one is more expensive. I would say it really depends on your use case. This is more for Alexa household users. You want voice control everywhere, like even when they're wearing glasses. So if you are one of those guys, then you might find this interesting. If not, like if you are more into creating video photos, the Matter one makes more sense for you. So yeah, anyways, like I just find this like trend very interesting. We are seeing an uptick when it comes to smart glasses, and I do think like we are moving towards the world of Black Mirror. It's like Elon Musk is developing a chip inside human brain that's Black Mirror, Black Mirror. In a live chat, if you guys are interested in getting your glasses like this. Yes, I'm seeing comment. What's wrong with my mic? My mic is out again. Sorry about that. Let's see if we could fix that in our future shows. But yeah, that's pretty much all I want to talk about in today's show. So last call to action. Make sure to give us a follow. So my Twitter account is _, and make sure to follow Roxham TV because we have all the updated news not only in Bitcoin, but geopolitics, but traditional market around the world. So do give us a follow. There's a lot of like valuable content being posted here frequently. That's it for today's analysis, of course, coming to you from the Roxton Hong Kong studio. I'm live Monday to Friday at 4 a.m. Eastern Time, breaking down the latest stories in crypto, market, and AI. So if you enjoyed the stream, make sure to hit the subscribe and catch the next one live. Every day we connected the dots between global news and digital assets so you can stay ahead of the curve. Wherever you're tuning in from, I hope you guys have a fantastic day and I'll see you guys in the show.